Hello and welcome. In this explainer, we're going to step back from the day-to-day noise of the charts. Our aim is to understand the deeper, fundamental forces that are really shaping the crypto market as we head towards 2026. The goal here isn't to predict the future, but to build a clear framework so you can observe and understand what's actually happening under the hood.
So much of the conversation around crypto starts right here with these wild price predictions that are frankly all over the map. This huge range really just reflects a market that's in a major transition, one that's very sensitive to what's happening in the global economy. And for a lot of us, that's where the feeling of uncertainty comes from.
But here's the thing. The most important story for 2026 probably isn't the price itself. It's the structural changes happening beneath the surface, the ones that are slowly transforming this industry from a kind of speculative Wild West into a much more mature financial ecosystem. So let's dig into what those forces really are.
For a long time, the crypto market danced to its own beat. It was all about these 4-year cycles, tied directly to Bitcoin's halving events. But that's changing. That internal rhythm is now being overpowered by much bigger, external pressures from the global economy. So, you could say the rules of the game are being rewritten. Things like what central banks are doing with interest rates or where big institutional money is flowing, those are becoming the real drivers. It's a sign that the market is growing up, becoming more integrated with traditional finance. It's still volatile, for sure, but it's operating in a much broader context now.
Okay, so the first major force we need to look at is the arrival of serious institutional capital. And this isn't just about big companies buying some crypto, it's about them building a much more stable, professionally managed foundation for the whole market. It's a top-down reshaping. Take a look at this number. In 2025, venture capital investment into crypto companies here in the US shot back up to a massive $7.9 billion. That's a 44% jump from the year before. What that tells us is that the smart money, the professional investors, are regaining conviction and placing very concentrated bets on projects they believe have a real future.
And this is the number of publicly traded companies that were holding Bitcoin on their balance sheets by late 2025. This isn't just a niche trend anymore. It's a growing corporate strategy, and it's helping to legitimize Bitcoin as a genuine treasury asset, something companies can use to hedge against economic uncertainty. And those corporations, all 172 of them, now hold roughly 5% of all the Bitcoin in circulation. Now, that might not sound like a huge number, but what it means is that a significant chunk of the supply is being taken off the open market and held for the long term. That's real, tangible commitment. Now, here's how it all connects. The exchange-traded funds, or ETFs, have really become the main bridge here. They are the regulated, secure on-ramp that allows traditional finance to systematically enter the market. And what this does is create a steady, persistent baseline of demand that just wasn't there before.
All right, let's shift gears. We've talked about the top-down flow of big money. Now let's look at the bottom-up innovation happening within the technology itself. The market's focus is really, finally, shifting towards projects that you can point to and say, okay, that has a real, measurable use in the world.
And we're going to explore 3 key stories that show this shift in action. First, the tokenization of real-world assets, or RWA. Second, building decentralized physical infrastructure, or DePIN. And third, the fascinating convergence of AI and crypto. So first up, RWA tokenization. The simplest way to think about this is creating a digital passport for a real-world asset so it can live on the blockchain. We're talking about making it possible to trade things like a piece of a commercial building or a corporate bond, instantly and efficiently online. And hey, don't just take my word for it. This quote from one of the most powerful people in traditional finance really shows how significant this idea is. The vision is a single, unified financial system where your stocks, bonds, and digital assets all live together seamlessly in one place. And this isn't just some far-off idea. The data shows it's happening right now. Look at this. The value of tokenized real-world assets on-chain absolutely exploded in 2025, going from $5.5 billion to over $18 billion. That's not just growth. That's a market finding its footing in a big way. And beyond RWAs, we have DePIN projects, which are basically using crypto rewards to get communities to build real-world infrastructure, like wireless networks, but at a fraction of the cost. At the same time, we're seeing AI and crypto come together to create software programs that can actually own things and make transactions on their own. This is laying the groundwork for a whole new machine-to-machine economy. Next, let's talk about how value and ownership actually get distributed in this new economy.
You've probably heard of airdrops. Well, they're no longer just simple marketing stunts. They've evolved into a really sophisticated tool for decentralizing networks and building actual communities.
This evolution is yet another sign of the industry maturing. Today's airdrops are carefully planned. They use data to find and reward the genuine long-term users of a platform, while trying to filter out the speculators who are just looking for a quick flip. The goal is to put ownership into the hands of the people who will add value over time.
And you can see here there is a real logic behind them now. It's not random. Whether they're rewarding early believers, stress testing a new network, or using game-like points to keep users engaged, each type of airdrop is a calculated business decision. It's designed to achieve a very specific goal for the network.
And these strategies are being rolled out by some of the biggest names in the entire space. The airdrops we're expecting from platforms like OpenSea and MetaMask, these aren't just small events. They represent huge wealth distribution moments that could bring millions of new people into participating in the governance of these networks.
So after all that, what's the key takeaway? Well, the purpose of this explainer wasn't to give you a crystal ball. It was to offer a clear, structured way for you to do your own observation and analysis of the market.
And that means we need to start asking better questions. We need to move beyond just wondering about the price. A much more robust way to look at things is to monitor the fundamental signs of health and adoption that we've just walked through. So here it is. Here is a simple framework for 2026. By consistently asking yourself these 3 questions, you can cut through so much of the noise. Are the big institutions putting money in or taking it out? Are the projects with real utility actually being used by people? And is the boring stuff like regulation and infrastructure getting better and more mature? Answering these will give you a much clearer signal of where things are really headed.
And ultimately, this is the key takeaway. The most important things happening right now are at the foundational level. The long-term value isn't being built in the flashy price swings, it's being built in the institutional, technological, and regulatory infrastructure, the plumbing that will support the entire digital economy for years to come.